Right now, there is a hot tub being craned onto my mansion, but I didn't start here. 17 years ago, I started with small trading accounts. Yes, size does matter, but I started small and grew big using a strategy I built for this exact purpose. Today, I'll show you a verified small trading account I grew 648% over the last 3 weeks with my step-by-step process. Just smash the like button, subscribe to the channel, and let's dive in. For this challenge, I started with a deposit of $800, and starting on May 19th all the way to June 11th, I completely transformed the trading account. You can see in my MetaTrader here, this is a live account, and the results were absolutely insane. But before I get into the entire strategy, let's start on day one. This was my first trade. Obviously, I recorded this here, and I was just looking at this level of demand. You could see price was at this level of demand right here, and all I was really looking for was about 7 pips. I was looking for a little bit of a retracement to this profit target right here, just about 7 pips, because I'm scalping, and this was the area that I was looking for about 150, and that is the profit right there. So now that we've got our first win under our belt, let's go over the main things I need to grow a small trading account fast. 1, I need my trading strategy, and 2, I need my execution model. And when both of these things go properly, I can get that fast account growth and reach my final destination. So let's start with number 1, the scalping strategy I used to grow my account over 600% in just a few weeks. So this is my orb-based scalping strategy. It all starts at 9:30 or 8 a.m. I'm looking at the 15-minute candle. This candle goes up, this candle goes down, and this candle closes. During that time, it creates our range top and our range bottom based on the candle low and the candle high. That is the trading range I'll be using for the session. This was my stream trading model. I know you guys missed my stream. I'll be back streaming as soon as I get into that mansion. Now, the next step is I come down to the 5-minute time frame, and again, I'm doing this at either 9:30 or 8 a.m. Eastern. The next step is direction, right? I want to make sure that I'm trading with the overall trend direction, and I want to see this candle break and close above the range high or below the range low, and that's telling me whether I'm going to buy or whether I'm going to sell. In this case, obviously, I'm going to buy because the candle broke and closed out the top. The next is the discretionary entry. There's so many places to enter a trade. You could enter at the top, you could enter at the retest, you could look for a fair value gap, a range midline, but most of the time I'm looking for a demand zone or a supply zone. That's when we have an aggressive push out of an area and then price retraces back to that area. So here we are again. We're still on that 5-minute time frame. We had our range get created. We had a level of demand get created. Price retraced to that level of demand. I entered the trading position right here and price pushed up, smashed my take profit, and I was off to the races. Now let me show you that trading strategy on the chart with live trades that I used during this challenge. This one being at 8 a.m. Eastern. You can see here I'm on the 5-minute time frame. I got the break, right? You could see price pushed up aggressively. We got the break and close right there. And that big push up right there created our level of demand. So what I want is price to come back to that level of demand. It is a simple process when you look at it the way I'm looking at it right here. You could see aggressive move up, come down, tapped in. At this point, I got into the trading position. Again, this was a trade that I placed live on the trading account. I will show you the result in a second, but first, let me show you exactly what happened. I smashed the take profit very, very quickly here, getting a 1-to-2 risk reward ratio. And to get the trading range, you see, I used the indicator Lux Algo opening range breakouts and targets right there. You can take a look at my settings. It's very simple right here. 15-minute UTC -4, 8 to 8:15 is one of the sessions. And if we go into my sell example here on gold, this was a live trade as well. You can see here 9:30 to 9:45. These are the only settings that I'm using on that indicator just to help me draw up that range high and that range low, so you don't even have to go on the 15-minute time frame. So what am I looking for right here? You know exactly what I'm looking for. I'm looking for that huge push push, right? I'm getting 3 red candles in a row. That gives me a level of supply, right? That's our supply zone. And then I want price to retrace to that supply zone, and that's where I can enter a trading position. Also, what else do we have? Well, we have the break and close out the bottom of our trading range. All of these things are telling me I want to get into a sell trading position. So I wait for price to come back to my zone. It comes in, it taps in, then I'm into the trade. And a lot of the time when this happens, you get that sniper entry, a clean win right there. Look at that sniper entry. That's why I always like to map on the supply and demand concept with the orb, because then I've got multiple confluences helping me win my trading positions. So as you can see here, I've been winning a bunch of trades. I just showed you this gold trade right here for 239 and this EURCAD trade right here for 216. But this challenge wasn't easy. Look, there were losing trades like these ones, and that's why I have a recovery system and an execution model that I'm always using when I'm trying to grow a small trading account. So let's get into that execution model now, and I promise it's something you've never seen before. Before we get into the execution model, a lot of you have been asking, where am I trading in 2026? And it's with the Risen FX broker. The spreads are low, commissions are low, leverage is incredible, and the withdrawals are always on time. So check the link in the description and let's get back to the video. So thanks to my execution model, I was able to win 27 of 38 trades for a 71% win rate during this challenge. And as for the pairs that I was trading, you can see I traded a bunch of Forex pairs, NASDAQ, US 30, gold, silver. I feel like my trading strategy works on pretty much every asset. Now for the execution model, I'm going to show you something you've never seen before. This can be done with a robot or manually. I'm going to show you both. So let me explain first with my robot. I drag a chart onto the platform. I take my robot, I drag it on, and I simply scroll down to an area called entry mode, and I select hybrid execution trading. At this point, I'm ready to place a trade, and then my robot's going to manage it. So here we are on EG. Let's place a random trade here. Okay, we're going to need a take profit. Let's put the take profit up here somewhere. We'll go for a buy trade, and there the trade is placed. Look, there was bad spread on this trading position, as you can see right here, but the price is starting to push up. Now what I want to show you is that we have the red line, which is the take profit line, and then we have the green line, which is the execution, the recovery model. If the price comes back to that green line right there, it's going to enter another trading position, a larger trading position, and then it's going to automatically adjust the take profit for me to increase my odds of winning the trading position. In trading, this is also referred to as grid. Let me just zoom in right here. You get the point. Maybe we'll check back in on this trade later, but let me teach you this execution model and the recovery right here. Okay, so we are looking at a trade. This is the last trade that I placed in the challenge. It was a gold trade. You can see here we had our range high and our range low. Price broke and closed above, so I was looking for buy trades, and you can see price pushed up with 3 green candles out of this area right here, making this level right here an area of demand for me. So simply waiting for price to come back to that level of demand, and I actually got into a trade around here. Okay, so obviously that was a bad entry. That demand didn't hold. We had another demand level down here. Okay, this was obviously a much better demand, and when the trade came to this level right here, the robot automatically triggered me into a second position. So at this point, I had the recovery trade, the grid entry, price tapped in, and then price started to push up and smash the take profit almost immediately right here. Now, if the price went against me further, the robot would enter an additional grid position, and it would also start to lower the take profit, right? So it would start to adjust the trading position like this. And this is obviously a risky way of trading, but this works very, very well for a simple reason, right? 70 to 80% of the time, the market is ranging. So when the market is ranging like this, and you're creating grid orders, as long as the price comes back like it does here, you're going to win the trading position. But even when the market is trending, let's say the market's trending, it pulls back like this, right? This is how the market actually works. So even if the price keeps pushing up, the robot will adjust the take profit so that when it comes down, you can hit this next level. Or if it comes up again, it enters another position and then it comes down and you hit this level. So the recovery mode really works. I have trading accounts to prove that it does. Well, like this exact trading account right here that I used in this challenge. If I go back to what I was showing you earlier, you can see on this M5 time frame here, we had our range high, we had our range low, we broke and closed, we created a level of demand, we entered a trading position, and then the robot sets up a recovery system right here. So if the trade comes down to this level right here, the robot will automatically enter a larger trading position and it will adjust the take profit to here. And then if the market goes against us to here, it will open up another larger trading position and it will adjust the take profit to here. And what generally happens is the market comes up, hits that take profit before it inevitably goes down if it's in a downtrend. Or it can go up and continue up, which in those cases, I have something called trailing stop in the robot, but I'm not going to get too much in the weeds. The bottom line is when I have a small trading account, I use my trading strategy and I use my execution model to try and grow that account as fast as possible. Now on this account, obviously I had a drawdown of 38%, which means at one point I had a trade that was 38% in drawdown. If that went to 100%, I'd lose the whole account. But that's the risks I take when I'm trading a small account. If you like this strategy, like the video, subscribe to the channel, join the Discord link in the description to check out my trading robot, and I'll be back next week. Much love.